Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 22nd of January 2020, so yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also, just before we jump in, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yeah, guys, I believe you can find a lot of useful stuff here for yourselves. So feel free to visit us on jfdbank.com and click on the research tab right here. So right now, let's jump into the charts. Now the first one I want to touch on here is the Dow Jones Industrial Average. Now yesterday the index closed in the red, but looking at the cash index right now, we saw that overnight during the Asian session, the index accelerated, and in general all the indices accelerated, and of course including all the cash indices. So in this case the Dow Jones as well. So I mean, looking at the price right now, where it is balancing near the 29,288-87 zone, roughly around excuse me, roughly around here, basically not far from the all-time highs, and the all-time high is and let me just put this one on the chart, is near the 29,373. So for now we're going to be very careful, because it continues to kind of climb higher, and especially we'll aim aim for higher levels if we get a push above the 29,373 mark again. This way, if we do see such a move, then this would confirm a forthcoming higher high, and well, it would place the index again into the uncharted territory. For now, everything kind of seems that the index is moving towards the psychological 30,000 mark, but again, that's a bit of speculation here. Probably in a way there is a good chance for this one to kind of test that area, but what we are looking here for is maybe a bit of a throwback first, before kind of trying to go towards that level maybe later on this year. So for now, how you could look at this is continue observing these two upside support lines. One is being the short-term upside support line taken from the low of the 3rd of December, which is closer to the current price, and the other one is the medium-term upside support line taken from the low of the 3rd of October. And in a way, if this suddenly drops lower and drops below the 29,127 zone here, then yes, we will consider a possible test of this upside line. But still we'll remain careful, because if it holds, we could see a nice rebound and a push back to the upside. But if this fails, this could lead towards some deeper declines, and to be honest, it would be a class still as a deeper correction, because anything anything above this, any move lower above this upside line will continue being seen as a temporary correction before another leg of buying. So that's why the bulls could still jump in somewhere around here and push this one back to the upside. So that's why, guys, for now, be very careful. Let's see how this is going to play out, and especially with this shorter term upside line. And in general, if we're going to reach that, if it doesn't reach it and pushes higher straight away and makes a move above the 29,373, then yes, we will aim for a new all-time high, and well, the sky's the limit for this one. Now then, jumping into WTI oil. Now this is where it's becoming quite interesting, and I've looked at oil recently. So basically, I was telling you guys to keep a close eye on this upside support line taken from the low the 3rd of October. And as you can see, not only that it managed to break this line again, but now it's actually trading below this key area of support that I talked about in my previous videos, and that was roughly around the 57.70 zone. So you can see that that oil is trying to make its way lower. Let's see how the daily candle is going to end, because yes, so on one hand we are seeing on a 4-hour chart, we are seeing a nice push lower, so that's wonderful. But let's see if the daily candle can stay here below this. If it can, well, it really increases the chances of for the WTI oil to move further down, maybe even going all the way back towards the 55 mark, which is the low of the 29th of November. So for now, guys, we are leaning more towards the downside, especially if the daily candle stays below this little territory right here, below the 57.70. So keep your eyes on this one. In terms of the upside, well, we'll take a very conservative approach and wait for a push above the 60 mark before considering a possible move higher. You could start looking at higher levels if we get a push back above the 58.77, but even then, if we do see something like this, a push above this area here, we'll still be very cautious, because we do have a lot of resistance here near these EMAs, especially the 200 EMA on the 4-hour chart, and the high of the 19th of or actually not the 19th, but the high of the 20th, because this 19th, basically that's the kind of the Sunday candle. So so yeah, we'll keep an eye on the Monday high, which is around the 59.21 zone. So yep, again, but for now it's leaning more towards the downside. Let's see if it can stay below this level here, below the 57.70 today. If it can, then well, yep, we will start aiming for slightly lower levels. GBPNZD. Now this is quite interesting as well. So this is what I was talking about this morning, and basically I was telling you guys to keep a close eye on this pair, because we were near this key area of resistance around the 1.9840, and what I was saying, that if we get a nice pop above this, then yep, it increases the chances of a further move higher. For now, we are going to be aiming for the 1.9950 253 zone, which is the high of the 19th of December. So, and then we'll slightly above that, we do have that psychological 2 level, which also could get tested. But again, given the steepness here that we're seeing, we'll be very careful with that. So if we get a push towards the 1.9950 253 zone, in a way it could stall around here and then maybe retrace a little bit lower. But if let's say if it continues to trade above the 1.9840, then yep, we will aim for that psychological 2 level. For now, this is our main target, the psychological 2, and after that we'll take it from there. In terms of the downside, now how you could look at this one, if it suddenly starts dropping back below the 1.9840, we may consider a deeper decline here, but that deeper decline still could be classed as a temporary correction, because we are trading above this short-term upside support line taken from the low, the 26th of December. So keep your eyes on this one, guys. USDCAD, now something quite interesting. So we saw the Canadian dollar strengthening today, and by the way, this is what I've looked at this pair this morning, and what I was saying, guys, to you, that given that the pair managed to break above this level right here near the 1.307880 zone, we were still hanging around above that area this morning. But what I was saying, that previously when I looked at USDCAD, this was the area for us to get a little bit more comfortable with the upside. As you can see, it didn't quite reach that area, this 1.3105, because a nice good break above this would confirm a forthcoming higher high, and more buyers could see this as a good opportunity to step in. But as you can see, the pair reversed back down, and this is again what I was talking about this morning. But even from here, we'll still remain probably somewhat neutral. Well, yeah, still remain neutral, because for us to consider a deeper decline here, a drop below the 1.3025 level would be required, because this is a very nice area of support here. As you can see how well this area acted, or should I say held the rate from dropping lower. That's probably, well, that's actually running from around the 10th of January. So we'll keep an eye on this one. If we do get a drop below this, or especially specifically if we get a at least a 4-hour candle close below this, then yes, we will consider deeper declines. But if we don't get a 4-hour candle close here, we may get a false breakout. And let's say if the rate stays for today above this area, then, well, I mean, we'll continue staying neutral, and we'll continue observing these two highlighted areas, because these are the ones for us. We need to see a breakthrough one of these before considering a further short-term, at least a short-term directional move. EURGBP. Now, I talked about this one as well, and I talked about this one yesterday in my Trader's Tea Time. What I was saying that basically for us to consider the downside, at least up until here, up until the 0.842120 zone, we needed to see a drop below the 0.8486. So we got our nice drop, so that's wonderful. The bears kicked in here, and now we are targeting this 0.8420 territory. We'll see how it performs around here, because that's going to be our target. Because if it rebounds, this might be confirming a nice wide range here. Which will be between the 0.8420 and the 0.8592 zone, roughly around there. So that's why, guys, for now, yes, we are aiming for the 0.8420. We'll see how it performs around here. If it holds, we may see a nice maybe a rebound and a push back to the upside. Again, I would probably suggest to be very careful here and cautious, because let's say we do have this nice rebound and a push back to the upside. For us to, let's say, at least start targeting within the range, the upper bound of the range, this possible range. First, probably I need to specify this still could be a possible range, not a confirmed one. So if we do get this rebound and a push back to the upside, we will aim for the upper side only if we get a push back above the 0.8486 zone. Still, we would have a bunch of strong resistance levels around here somewhere, but slowly, step by step, we will aim for the upside again. So basically, this arrow has to be like this, and but again, that's only in the scenario if we see a drop lower, if the 0.8420 zone acts as a fantastic area of support again, and then we get a rebound and a push higher. Only after, like I said, a break above the 0.8486 level, that we will consider a possible move to the upside. Here, do not exclude a possibility that we could see a drop below the 0.8420, and if this area surrenders and we see the rate staying below here, then, well, it increases the chances of a deeper move to the downside here. But again, for now, guys, be very careful. For now, the main target is around the 0.8420, as I've mentioned yesterday in my Trader's Tea Time. And the last pair for this session, as always, euro-dollar. So we did get a drop lower a little bit, but as you can see, this 1.1075 area continues to hold nicely. We had a small rebound, but it's not significant, and we got stalled here near the pivot. Today's pivot, should I say, just slightly below it. And basically, this is coming in line with what I was talking about this morning in my Trader's Espresso, and what I was saying, that we may see a bit of a neutral day today, because all the action might come in tomorrow, and tomorrow we do have the ECB interest rate decision, and then the ECB press conference after that. So yep, guys, for now, keep your eyes on this one, but again, probably most likely that we may see this one stalling around here somewhere and waiting for tomorrow. Again, the same scenario remains. We need to see a drop below the 1.1066 before we could consider deeper declines here. But again, for now, as long as it remains above this upside line, still kind of, let's say, everything's leaning more towards the upside. That said, as I'll repeat the same thing that I've mentioned previously. For us to, let's say, start looking at higher levels now, at previously I was talking about this 1.1143 zone. Yes, this level still remains for us an important one to keep an eye on, but from the very short-term perspective, you could start looking at the high of yesterday, which was around the 1.1118 zone. If we get a push above this, this would also place the rate above the 200 EMA, and in general above all of its EMAs on the 4-hour chart here. So basically this could increase the chances of a further rate rise here to the upside. But again, guys, be very careful. Probably wait for a confirmation break at least above the 1.1118. Then, of course, have a tight stop loss in case this suddenly reverses back to the downside. But like I said, we will start considering higher levels above the 1.1143. If this level here, the 1.1163, gets cleared easily, then yes, further acceleration to the upside is possible. For now, at this point in time, we are going to remain neutral, and we're going to continue observing this upside support line and how the rate behaves around it. If it gets broken and we see a nice daily candle close here below this, below the 1.1066, then, well, I mean, this could look ugly for the euro dollar, and especially for the bulls, as it could increase the chances of a further drift lower. So keep your eyes on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, and that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, guys, and I'll see you tomorrow at my Traders Espresso at 7 o'clock GMT. Thank you very much, and bye-bye.